ESAF Small Finance Bank disappointed with the kind of deterioration that we have seen in the asset quality, and that's exactly the point we're going to discuss with Mr. K. Paul Thomas, founder, MD and CEO of ESAF Small Finance Bank, joining us on the show. Hi, good to be speaking with you, Mr. Thomas. While your advances and deposit growth is healthy, there's a major deterioration in your asset quality. What has caused this massive spike in the GNP and NNPA ratio? Is it transient in nature? Was there a one-off? What we should expect going forward?
It is mainly due to the last quarter also we had this issue. So we have faced some challenges in our microfinance portfolio in some of the locations, mainly in the coastal areas. There was some income issues of our customers due to the fish catch of the fish has come down. Various and climate change issues have impacted, and also some other locations due to the it has prolonged for some time. Normally, it used to settle down in 1 or in 2 quarters, but it has a little bit prolonged. So, but we have and also we have another major challenge we faced was around very high attrition of field staff and one of our major business correspondent partner in ESAF cooperative. So that also we have taken as a bank, we will be bank brand, we will be able to attract more staff. So we have taken over that business to manage directly. So around we were able to we have added around 5,196 employees from the BC to the bank direct roles, and bank started directly managing the micro banking businesses operated through our banking outlets. So all these measures will definitely bring results. That is our confidence. Actually, in next 2 quarters, we will be able to bring down the asset quality into control.
Mr. Thomas, is it likely to persist for a little longer, or perhaps down the line there could be some recoveries once things stabilize? How should we look at, let's say, Q2, Q3, going forward?
Almost 60% of our 60 to 70% of our NPA customers are making part payments. The problem is that once you the account become an NPA, and these low income customers they don't have the inputs at one go. So that is why it will take some time. So they are not able to completely pay out all the dues and come out of the NPA tag. So that is why this is taking time.
Enough and more collateral, and are you expecting recovery in some of the accounts where because of the RBI guidelines you have taken a write-off? So right now it looks big, but if recovery starts, you would be able to write back?
Recovery will definitely will improve, and we have handled similar situations in 2016 due to the demonetization, and we had 2 major floods in Kerala, when at that point Kerala was our major market in 2018 and 2019. So we were able to manage a similar situation at that point. So we are confident that we'll be able to recover, and that definitely once the return of accounts, even the return of accounts during the COVID period also, now collections are coming. So that will definitely, that is anyway it is a sole portfolio, it is managed by ARC. So but collections are coming. So we are confident because we have been in this space for the last 30 years in micro lending space. And also on the other side, we are reducing our concentration on microfinance secured loans. Systematically, we were able to bring down the unsecured microfinance loan to 70%. So every year we were able to reduce 4 to 5% of the microfinance portfolio, significantly improving the other assets, gold loan, mortgage, mobility, and agri books. So that focus is also continuing.
So when typically a bank goes through what could be called as a uptick in NPAs, then the cost of acquiring new funds, especially from the wholesale market, it tends to go higher. That has been the industry, experience. Could that also have an impact on your net interest margin, cost to income ratios for next 2 or 3 quarters, because wholesale lenders will now be demanding an extra safety spread?
See, that is an interesting question. Actually, we have grown a year-on-year basis. Our deposit have grown 33%, and quarter to quarter we have grown 5%. And total deposit stands at 20,887 crores. So 92% of the deposits are retail deposits. So we don't have any dependency on bulk deposits or bulk borrowing. So there is no cost escalation due to this purge in NPA or anything, but due to the overall interest rate increase, we also have increased, but we are in a very comfortable position on our deposits, and our retail, the branches, 755 branches, all branches are involved in deposit mobilization, and even our CASA percentage also, from 18% previous year June quarter, it has gone to 23%. So both CASA and retail term deposits are showing very good progress. So we don't have a specific dependency on bulk. So that is not going to impact us on the NIM.
Understand from you what the outlook is on the cost of funds and the impacted business going forward?
So the cost of fund remains the same. I'm not seeing any upward increase on cost of fund. But we currently have only one challenge on this NPS, and we have taken all our focuses on working those customers and bring the NPS down. All other business parameters, we are doing very good in all business growth, and even on the asset side, there is first quarter there is not very significant growth was not there, but that normally in the second quarter onwards the disbursements take momentum, and we see good growth through our branch network and the BC managed customer service centers. We have 930 business correspondents manage the customer service centers. All these touch points, this is a high touch model. So this franchise definitely will help us to grow and achieve our business targets which we have planned.
Mr. Thomas, on that note, we'll let you go. So there has been a deterioration in the asset quality, but that's transient on account of the specific problems that we have seen in certain coastal areas and regarding the attrition that has been there in one of the businesses. Hopefully bounce back in a couple of quarters. But
if you like this video, then like, share and subscribe to ET Now.